Welcome back to Smart Stock Sam, the channel where we cut through the noise, track the data, and put real money-making setups on the table before the crowd even knows they exist. If you are new here, hit that subscribe button right now, because what we are about to break down is exactly the kind of trade thesis that separates disciplined investors from reactive ones. And today, we are going all in on POET Technologies, a stock that crashed nearly 50%, then came screaming back 50% in a single week. Is a gamma squeeze about to explode this thing toward $15? Stick around, because by the end of this video, you are going to understand exactly why the smart money is quietly loading up while retail traders are still licking their wounds. Before we dive in, here is the part that matters most to our community. When we flagged the technical recovery roadmap on this stock, we set a short-term target of $11. Within 48 hours, the price hit that exact level. That is not luck. That is process. That is data. And now, with a fresh set of catalysts loading up for the week of May 11th through the 15th, we are about to walk you through the next major move, step by step, the Smart Stock Sam way. Here is the macro view of what we are covering today. 1. The violent 2-week price whipsaw that shocked the market. 2. The single event that caused a near $500 million valuation collapse in under 6 hours. 3. The explosive 50% recovery and the 4 engines that drove it. 4. A hidden short position that could ignite a parabolic squeeze. 5. The critical earnings report that will either validate or destroy the entire setup. And 6. The exact trade strategy, entry zones, targets, and stop levels for the week ahead. This is not speculation dressed up as analysis. This is a precision framework built on real data. Let us get into it. Take a look at this chart. What you are seeing is not just a price move, it is a story of fear, capitulation, and institutional opportunity playing out in real time. At point A, POET was sitting at a pre-crash high of $15.50. Strong momentum, AI infrastructure tailwinds, and a promising partnership pipeline were pushing institutional confidence higher. Then, almost overnight, the floor disappeared. By point B, the stock had collapsed all the way down to $7.95. That is a catastrophic loss of nearly 50%. For most stocks, that kind of drop is a death sentence. But then look at point C, a recovery peak of $11.83, with enormous volume behind it. Now here is the question every serious trader has to ask. Is this a dead cat bounce? Or is it the first leg of something much, much bigger? To answer that, we have to go back to the moment everything fell apart. April 27th, 2026. Mark that date. On that single trading day, POET Technologies saw a 47.35% collapse. Not a dip, not a correction, a full liquidation event. And the root cause traces back to one person, one interview, and one catastrophic breach of confidentiality. POET's own CFO, Thomas Mika, made unauthorized disclosures during a public interview on April 21st. What followed was swift and brutal. Marvel Semiconductor formally canceled all purchase orders originating from Celestial AI. Think about what that means. Marvel was not just a customer. Marvel was the central pillar of POET's entire 2026 growth narrative. When that pillar collapsed, institutional trust evaporated instantly. Going from $15.50 to $7.95 in a single session is not just a price drop. It is a total destruction of the confidence premium that had been built over months. Could this company survive a self-inflicted wound of this magnitude? That was the question everyone was asking. And the answer the market gave over the following week shocked just about everyone. Here is where the Smart Stock Sam forecast started paying off. While retail investors were panic selling into the abyss, we were tracking the technical roadmap, and the data was telling a very different story. Between May 5th and May 8th, POET staged a staggering 50% climb, recovering from $7.95 to an intraday high of $11.83. closing the week at $10.95. That final Friday session alone printed a 14.3% single-day surge. Let me say that again, 14.3% in one day on high volume after a catastrophic crash. That is not noise. That is institutional accumulation. That is the signal. But what specifically fueled an engine that powerful? There were 4 distinct catalysts working together like a perfectly synchronized machine. The first was fundamental. Management stepped up. They confirmed a brand new $5 million production order for their Infinity optical engines from an unnamed technology customer. In a post-Marvel world where everyone assumed demand had dried up, this order was a lifeline. It proved that the underlying technology still had buyers willing to put real money on the table. Could there be more unnamed customers quietly placing orders right now? That is a question worth sitting with. The second catalyst was macro. Easing tensions in the Middle East, combined with the emerging Pax Silica trade framework, gave the entire semiconductor sector a meaningful tailwind. When the macro tide lifts, the highest beta names tend to move the most violently, and POET, with its extreme volatility profile, was primed to catch every wave. The third catalyst was structural. Defiance launched POEL, a 2x leveraged long exchange-traded fund tied to POET's price action. Every uptick in the underlying stock gets amplified and fed back into buying pressure. In a stock already recovering on high volume, adding a leveraged instrument to the mix is like pouring jet fuel onto an open flame. The fourth catalyst was purely technical, and for our community, this one hit closest to home. The price action followed our predicted roadmap almost to the dollar, hitting the $11 target within 48 hours. When the RSI, the moving averages, and the volume patterns all confirm the same setup, that is not coincidence. That is confluence. And right now, the algorithmic picture for POET is screaming something very specific. The RSI at 14 periods is sitting at 65.33. That is strong bullish momentum. But here is the critical detail. It has not crossed above 70 yet. It is not overbought. There is still room to run before any technical exhaustion kicks in. More importantly, POET is now trading comfortably above its 200-day simple moving average of $7.98 and its 50-day simple moving average of $8.61. In technical analysis, when a stock claws back above both of these key levels after a crash and holds them, the repair rally is officially confirmed. The bears have lost the structural argument, but there is something lurking beneath these clean technical signals that could turn this from a normal rally into something truly explosive. Look at this carefully, because this is where it gets combustible. The publicly reported short interest sits at 8.14% of the float. You might look at that number and say, that is not enough for a meaningful short squeeze. And you would be wrong, because that is only the surface. When you dig into the off-exchange data, the dark pool activity, you find an off-exchange short volume ratio of 43.96%. Nearly 44% of the trading volume in this stock has been executed in dark pools, hidden from the public tape. That is an iceberg short position. The visible tip is 8%. The submerged mass is enormous. Now ask yourself, what happens to those short sellers if the earnings report on May 13th or 14th delivers a positive surprise? What happens if the Malaysia production facility is confirmed on schedule? What happens if even one institutional analyst upgrades their price target? Every single one of those short positions has to be covered. And when 44% of the float worth of shorts all rush for the exit at the same time, the price does not move. It launches. The options market has already picked up the scent. The put-to-call open interest ratio is sitting at 0.56. That means for every one trader betting on a decline, nearly 2 traders are positioning for upside. On May 8th alone, over 270,000 contracts were traded. That is not retail speculation. That level of options activity attracts market makers who then have to hedge their exposure by buying the underlying stock. That dynamic is called a gamma squeeze, and when you layer it on top of an already compressed short position, you have a setup where the price mechanics could become self-reinforcing to the upside. Is this the kind of setup that only comes along a few times a year? Absolutely. Is it guaranteed? Nothing in markets ever is. But the structural pressure is undeniable, and the institutions seem to agree. While retail investors were dumping shares in a panic, Raymond James Financial was quietly increasing their stake by 75%. Morgan Stanley held firm. Cap International maintained their position. These are not momentum chasers. These are firms running deep fundamental models that apparently looked at the Marvel situation and concluded it was a temporary setback, not a terminal event. Meanwhile, the average Wall Street analyst price target is sitting at just $8.20. With the stock already trading near $11, those analysts are going to be forced to issue upward revisions just to maintain credibility. Analyst upgrades after a recovery are like adding a second engine to a plane that is already climbing. The fuel for the next leg higher may already be written on analysts' desks, just waiting to be published. But we have to be honest. No high-conviction setup comes without serious risk, and POET has some of the most significant overhangs of any name we have covered in 2026. The company is currently defending itself against multiple class action lawsuits filed by firms including Pomerantz and Rosen. The core allegations center on two issues: misrepresentation of POET's passive foreign investment company tax status, and the confidentiality breach that directly caused the Marvel cancellation. June 29, 2026 is the critical lead plaintiff deadline. Until these legal battles reach resolution, or at minimum, until the market gets greater clarity on potential liability, they will act as a ceiling on the stock's valuation multiple. Could a negative legal development between now and late June send the stock back toward that $7 range? That scenario cannot be dismissed. Risk management is not optional here. So why are we still characterizing this as a high-conviction, speculative position? 3 pillars. First, capital runway. POET is sitting on a cash reserve of $430 million. For a company that has not yet reached full-scale commercial production, that is an extraordinary war chest. It eliminates near-term bankruptcy risk entirely and provides years of operational oxygen to execute on their technology roadmap. Second, technological inflection. The company is targeting production of over 30,000 optical engines this year. More critically, their 1.6 terabit optical module, the crown jewel of their product line and the technology most directly tied to the AI data center build-out, begins customer sampling in the second quarter of 2026. If that module hits its performance targets and customers place production orders, the Marvel cancellation becomes a minor footnote in a much larger success story. Third, governance cleanup. On June 26th, shareholders will vote to re-domicile the company in the United States. This is not just administrative paperwork, it is a structural transformation that eliminates the toxic passive foreign investment company classification and opens the door to major United States institutional capital that currently cannot touch the stock. Could the redomicile vote be the single most underappreciated catalyst on the entire timeline right now? We think the market has significantly underpriced that event. But before June 26th, before the legal deadlines, before any of that, the immediate battleground is the Q1 earnings report expected around May 13th or 14th. And this report is the make-or-break moment for the near-term trade. Revenue numbers are expected to be minimal. That is already priced in and will not move the needle. What will move the needle is executive commentary on 3 specific items. 1. Confirmed production readiness at the Malaysia facility. 2. Guidance on the 30,000-unit optical engine delivery schedule. 3. Any update on new customer relationships to replace or supplement the Marvel volume. If management walks into that earnings call and delivers confident, specific, verifiable confirmation on all 3 points, the technical setup we have been tracking accelerates significantly. If they hesitate, if they announce delays, if the Malaysia timeline slips, that V-shape on the chart could rapidly transform into a W and the downside targets come back into play fast. Here is the exact actionable framework for the week of May 11th through the 15th. The ideal entry zone is between $9.50 and $10.15. A pre-earnings pullback toward the 50-day simple moving average in that range would represent an optimal risk-to-reward setup. You are buying confirmed technical support with a clearly defined stop level. The primary bullish target sits between $12.50 and $13.50. That level aligns precisely with the highest concentration of open interest in the May 15th call options, which means if the gamma squeeze mechanics activate, that is where the most intense buying pressure is likely to concentrate. On the downside, the key support zone is between $9 and $9.21. Your hard stop loss belongs below $8.85. No exceptions, no averaging down below that level. Finally, the volume trigger to watch on Monday morning. If the first hour of trading exceeds 25 million shares, the probability of a squeeze run toward $12.50 increases substantially. Volume is the fuel. Without it, the setup stays theoretical. Now, before we wrap up today, a word that should be in every investor's vocabulary, especially on high volatility, speculative setups like this one. Everything discussed in this video is for informational and educational purposes only. Nothing here constitutes financial advice, investment advice, or a solicitation to buy or sell any security. Poet Technologies is a high-risk, high-reward speculative position. You can lose money, including your entire investment, in situations like this. Always do your own due diligence. Consult a licensed financial advisor before making investment decisions, and never risk capital you cannot afford to lose. Markets are unpredictable. Past technical accuracy does not guarantee future results. With that said, here is the bottom line on Poet Technologies as we head into what could be one of the most important weeks in this stock's history. The technicals are bullish. The institutional accumulation is real. The short position is a loaded spring. The earnings catalyst is imminent. And the long-term technology story, $430 million in cash, 30,000 optical engines, a 1.6 terabit AI module, and a governance transformation on the horizon, has not gone anywhere. This is a high-stakes, discipline-required, eyes-wide-open, speculative play. Enter in the 950 to 1015 zone, respect the stop at 885, and watch the volume on Monday morning like your portfolio depends on it, because it just might. Now here is the question I want you to answer in the comments below. If Poet delivers a clean earnings report on May 14th and confirms the Malaysia timeline is on schedule, do you think the gamma squeeze gets us to $13 before the end of May, or does the legal overhang cap the move below 12? Drop your level and your reasoning. I read every single comment, and the best answers get featured in the follow-up video. If this breakdown gave you value today, please smash that like button. It helps more people find this content and keeps this community growing. Subscribe if you are not already part of the Smart Stock Sam family, because we have major coverage planned all week as the earnings report drops. And if you really want to support the channel and keep these deep dive analyses coming, consider sending a super thanks using YouTube's support feature. Every contribution directly funds the research tools and data subscriptions that make this level of analysis possible. I will see you in the next one. Trade smart, stay disciplined, and always protect your downside.